Bitcoin in 2017 was a once in a lifetime event, right? It goes from whatever, sub 1,000 to almost $20,000. That's fantastic for anybody out there. Even now, the people with the $100,000 goals and so on, that's not a 20 bagger. That's a once in a lifetime event. But in the mining space, 20 baggers happen every year.
All right, everybody, welcome to the next Big Rush. I am super excited today because I am here with the one and only Lobo Tiggre. Now, if you haven't heard of this guy, you have definitely never invested anything in junior mining stocks. That's just it. I'm just going to put it like it is. He is the founder of the Independent Speculator, and he has seen just about everything in the industry, the good, the bad, and the ugly. He has a really interesting life story and investing story, just the way that he's built up his career. He's been mentored by some of the guys that you and I will probably donate a right arm to follow closely. And I want to welcome you, Lobo.
Well, thank you very much. After an intro like that, I'll have to really work hard to deliver some value here for the audience.
I'm sure it's not going to be any hard work for you because I've seen a lot of your content actually, and you always deliver lots of value for sure. Now, Lobo, you're a junior mining guy, right? And you have seen cycles come and go. Where do you see where we are right now in regards specifically, not to the equities, but to the commodity itself of gold? How do you see gold? Do you think it's more of a supply and demand story right now? Is it more to do with the macro? How do you see gold playing out as, the I guess the one topic that we always come back to that has a few question marks behind it?
Well, of course, gold is money, as JP Morgan said. Everything else is credit. So it is quite different. And yes, silver's money too. I get that. Though, it's in an interesting transition phase at the moment. We'll come back to that, I'm sure. But it's important to separate in one's mind, mining, minerals, commodities. Gold is not like pork bellies or copper even or other minerals or commodities. It is money. And the central banks of the world can deny that until they're blue in the face. But note that they're buying more of this stuff, right? Than they're selling, and they're accumulating at record levels. And not to go too far off the tangent here, but the Basel III Accord, which is overarching central bank rules going into effect now, treats gold as a tier 1 asset, not silver, sorry. But so whatever the central bankers say, what they do tells us that gold is still money. And therefore, yes, it has to do a lot with the macro setting, the economic setting. Really, it's a Forex question. I think of gold as a foreign currency, foreign to all the fiat issuing governments of the world. And so that's the way I look at it. And that said really quick that, it is also a metal, though. It is also used, right? It has physical properties that make it unique and underlie the use cases, Misesian regression, right? There actually is, despite Warren Buffett's pet rock theory, a use for gold, a substantial historical, thousands of years of use case for gold due to its unique properties. So there is a commodities aspect there. And I'll just briefly say that I see the world in a huge commodity super cycle. And by that, I don't just mean, okay, we're going to go up now or down now. I'm talking multi-decade super cycle based on past underinvestment and where we go from here. And
that's a big claim, a multi-decade super cycle. Tell me more about that, because a super cycle is hard to grasp.
But okay. I'll try to keep it brief. It's not just the battery metals craze or phase or even new paradigm, if you want to be very optimistic about the battery metals. And it's not just the COVID kerfuffle. I think that put a big curve in a lot of trends that were ongoing. I know we had a serious underinvestment in the entire agriculture is different, but let's say the mineral space for many, many years. And that set us up for what I think of as this very durable, decades long, and look at Dr. Copper as the prime example, commodities super cycle. And by that, I mean that the commodities tend to move together. And sometimes one will have an idiosyncratic movement one way or the other, you know, a big mine shutdown for one of the smaller ones, or even the bigger ones, if it's a big enough mine, can impact the global market. But all of these things are, if not noise, they're less important fluctuations to what I see as a big megatrend. But you know my motto, you know, I've learned from Rick and Doug, right? You know, and my motto is, you know, Rick likes to say, I've never confused the inevitable with the imminent. And my motto is, forget about inevitable. I don't even want to hear about imminent. I want to know what's happening now. Because so often we are wrong about, we think something is imminent. We confuse the inevitable with the imminent. It's not imminent. So this question you've asked and this big mega trend that I'm talking about, I see that as context, and it's not unimportant. It matters. The macro does matter, but it's only context. I want to know what's happening now when I'm making my investment decisions. And as an evil peasant scum newsletter writer, right, you know, the time frame of relevance for most of my audience is a year or two. Few of them have more patience than that. So what, you know, I think copper is going to run for the next 20 years. But that doesn't help me if we're going into recession now and copper is likely to go down now. And I tell people, oh, don't worry about it. Buy copper. You'll be fine in 20 years. Well, you know, they don't care about 20 years. And they will scream bloody murder if they buy copper now and it goes down in 6 months or 2 or whatever. So that's the broadest context I can give you, Fabi. I'm very bullish on the whole commodities space, and particularly the metals and mining, and which makes me love the juniors, because when you make a discovery, you unlock a lot of value. When you get taken over, you get a liquidity event and often a nice premium. And it's, you know, it's a way, here's the way I like to frame it. Bitcoin in 2017 was a once in a lifetime event, right? It goes from whatever, sub 1,000 to almost $20,000. That's fantastic for anybody out there. You know, even now, the people with the $100,000 goals and so on, that's not a 20 bagger, right? It's just very difficult for it to go. The $1 million people have to be right for Bitcoin to give you another one like that. So that's a once in a lifetime event. But in the mining space, 20 baggers happen every year. Now, it's nobody knows who's going to deliver that, right? Not me, not Rick Roll, you know, not anybody knows where the next 20 bagger is coming from. But in the mining space, they happen every year, or junior mining space, not the majors. You know, 10 baggers, you know, several of them happen every year. The right flavor of the day delivers 10 baggers easily enough. And even the mythical 100 bagger, I got to say, I've never had one. I think my highest might be like 30 or something like that times. But they do exist. My friend Doug Casey has 2 of them documented in his career that I know of. And so this is why I play in this sandbox. This is why, as you introduced me, I'm a junior mining guy. And by the way, I'm not even telling everybody, oh, hate Bitcoin, don't invest in anything else. I'm not saying that NVIDIA can't have another great year this year. That's not my wheelhouse. What I'm saying is this is something I understand. This is something I have experience with. And it, if not periodically, with some frequency, delivers fantastic gains. That's why we bother. That's why we deal with all the angst, you know, and the Mr. Market pulling our hair out because it's not doing what we think it should, right? That's why we're here. Okay, so broad context. Do you want me to get back to gold, which you asked about?
Sure.
All right. So gold being money, it does move in a different way. I do think of it as Forex. The longest standing, most powerful predictor, and it's not one thing. There's no one chart and you say, oh, this is going to tell you where gold's going to go. If it was that easy, everybody would do it, right? We'd all be billionaires. Not so easy. But in the multivariate examination, the one that historically has been the most predictive has been real rates, real interest rates. not nominal, but real interest rates. High real interest rates are bad for gold, which doesn't pay interest, right? Low rates means something's wrong. Therefore, there's fear factor, safe haven demand for gold, right? So it makes sense. It makes intellectual sense, at least. Recently, that relationship has broken down. It has broken down so much that nominal rates actually, I did the numbers a couple months ago, so I can't say this is true today. But when I did the numbers recently, nominal rates correlated more highly with gold than real rates. And I think that has to do with rates being nailed artificially at zero for so long. Basically, the rates became noise. It's not a signal. If no matter what happens, it's going to stay zero, right? On the shorter term, the dollar, the DXY in particular, the dollar index has become a Rorschach mirror image with gold. They wiggle in almost always in opposite directions. There are exceptions, like a war breaking out or something like that. But the dollar has been, or the DXY has been, not, if not predictive, indicative, like it moves the opposite, right? So what that tells us, it doesn't help us predict, if the DXY goes down today, gold is up today. It doesn't tell us where it's going to go tomorrow. But it does tell us that we need to be watching the dollar. And therefore, I don't know if you've interviewed the dollar milkshake guy. He's my fellow Puerto Rican here.
But I do follow him. Yeah.
Yeah, right. So I put a lot of weight in guys like that who have a good track record at telling us where the dollar is going. And by the way, he's near-term bullish dollar or whatever that's worth.
Interesting.
Even though he is a gold owner and he has his clients in gold and all that, people love to hate on him for the times when he says the dollar's going up and gold's going down, but he's just trying to call it like he sees it. And I respect that a lot. Anyway, the context for me though isn't just what's the next fluctuation in the dollar. And it drives me crazy when a data point comes out, like as you and I are speaking. I don't know when this will get published, but the Fed came out
probably tomorrow. So very quickly.
Okay. So Fed decision yesterday or 2 days ago, if you post this tomorrow, and the market goes nuts on a number of different things. The Dow hits an all-time high, gold surges, dollar top, all this stuff goes on this one data point, knowing that the next day, the ECB has a rate decision. Oh, and by the way, the Bank of England too. And so if the dollar, not in real strength, because we all know that all these fiats are losing value every year, that's what inflation is, but the dollar on the Forex markets, if strength there is bad for gold, you can't just look at what the Fed does. You have to look at what the Fed does compared to what the other central banks.
Absolutely.
In theory, the dollar and the yen and the pound and so on, these things represent the economies which these central banks are pulling the levers on and trying to push around. So this is, I'm feeling a bit long-winded here, but what I'm saying is the context for Forex is really in the driver's seat right now. In many ways, it's a mistake. I call it the wrong trousers. I have a free essay on my website called The Wrong Trousers, which anybody's welcome to look up. Because really, how the dollar compares to the euro means nothing in terms of how much purchasing power they have in the real world. Both are going down. And who's winning the race to the bottom at any given time, it doesn't make the other one more valuable. It just means it's losing value less quickly.
It's less
right?
bad.
And compared that to gold or anything real, right? They're both losing. So looking at the DXY, looking at Forex is really looking at the wrong measure. It's the wrong trousers. That's a Wallace and Gromit reference for anybody who didn't get that. But so, I can jump up and down and tell the market, you're looking at the wrong, you're wearing the wrong trousers. It doesn't matter. They're wearing them and they're walking down the street in them and they think everything's fine. By that, I mean the COMEX traders, the guys in the LME, these folks, they're looking at this data. And so we can say you're wrong, you shouldn't look at that, but it doesn't matter as long as we quote their trades for prices. If we say the price of gold is, the front contract on the COMEX, well, that's electronic, it's instantaneous, it's easy to quote. That's why we do that, but it's actually wrong. That's not the price of gold, certainly not the value of gold. That's what those futures traders were willing to do at that moment. It's just convenience. We looked at that. But since that's the way the market works, since that's how people think of the price of gold, which really should be the gold dollar exchange ratio, by the way. But that's how they look at it. That's the driver. That's what makes it move. That's what makes money for the miners who eventually sell their gold into the market. So we can say it's wrong, but it is what it is, and it is relevant, and it determines the outcomes of our speculations. Long story short, I'm looking at the balance of things, and yeah, right now I can see why it seems, I can see Brent's point. The US seems to be in better shape than Europe, and so theoretically the dollar should be stronger. On the other hand, Europe has more, and it's not just Europe, there's also China, the UK, there's Japan, which is becoming relevant again for the first time in decades. And I'm looking at this international dance, and two things. One is a lot of these other countries have much more social support. Like, okay, Europe may be in worse shape, but they've already got more welfare. They don't need to spend more on welfare or enact new welfare plans if they've already got a higher and bigger, more supportive social security net than we do, right? Whereas we would have to print more money, really, because we don't have it. Oh, and by the way, not just Europe, China. If China needs to stimulate or support their economy, they don't have to print money. They've still got, tons and tons of cash in the bank. They got, I don't know if it's $1 trillion still or whatever in US, money or equivalent just sitting there, right? So they don't have to print it. They can just spend it. No debt, right? No additional debt. So I think the international context is important. I think that it's not as clear-cut as it might seem. I think the dollar bull case is potentially weaker just based on those macro settings. But here's the other thing. I also think that even though it has surprised many of us, the team hard landing has been, it looks like we're wrong right now, right? It looks like we're just missing it. We underestimated what a wonderful job Powell and company have done. Everything's fine. I don't think that's right. My friend Adrian Day, another fellow Puerto Rican, he points out that the average length of these so-called long and variable lags is 22 months, which means we're just getting there now. And that's the average.
Wow.
And if the average comes after a period of extraordinary historic intervention in the markets, why would you expect it to be average? You send people a bunch of stimmy checks, you put trillions of dollars into the economy, people's pockets. It makes sense for the long and variable lags to be on the longer side this time. So team soft landing out there saying, oh, well, we haven't had a recession so far, so we're not going to have one. It's done. It's conclusive. There's no hard landing. Sorry, I misspoke. If we haven't had a recession, if we haven't had the hard landing, they're wrong. That's simply historically inaccurate. The data tells us it is premature to make that conclusion. But what it means is, where I'm going with this is, I think the US is probably weaker than it looks. I have to qualify with probably, because I've been saying it's weaker than it looks, and it hasn't come out my way so far for some months. So I'm going to say it's probably weaker than it looks. And I think this is key. I just can't wrap my mind around going from zero to 5.5% interest rates, and nothing really breaks more than a few mid-sized banks. I mean, I could be wrong. We are truly in an unprecedented time. Like, there is, at best, some historical analogs, but there's nothing quite like this. We have literally never been here before. So I can't say I know this will happen. But everything I do know about economics, human psychology, history tells me you can't go from free money, easy money, free money to real tightness where interest rates matter. There is a cost of capital now. I just cannot conceive, inconceivable, to make another movie quote, that we could make that change without more things breaking. So I think the US macro situation is worse than it looks. Labor hoarding post-pandemic and that sort of thing is masking the weaker economy it looks. That aside, I think the probability is very high that the Fed is breaking something else, even as you and I speak, and we'll see it before long. We're getting into the time frame now where that the piper should come to collect his due soon. And it's not like me to make big bold predictions, but I'll give it to you here, Fabi. I'm either right or I'm wrong. And I think if I'm still saying, oh, it's coming soon, like Linus and the Pumpkin Patch, say 6 months from now, I've missed something, right? If we're midsummer or getting into the fall of 2024 and there's still no hard landing, no sign of recession, then something was different this time.
That is a happy note for us gold bugs, to know that the lag might actually be historically longer than most have predicted, and that we might be entering recession right now. We're just about to. I know it sounds horrible. We're not doomsday people, and we're not cheering for this to happen, but we try to take a look at the whole picture and position ourselves in such a way where we can profit from it. Speaking of which, what does that mean to the gold miners, from exploration to the majors? What are you seeing right now, and where's the opportunity in your opinion?
Well, several things. People aren't going to like this. A lot of people aren't going to like this, but I'll take one on the chin for the team here, Fabi. The better mining stocks are responding to higher prices. And if your portfolio is not, then you really need to look in the mirror and ask about stock selection. Who put those stocks in your portfolio? Well, you can blame those fast talkers on Pender and Howe in Vancouver for selling you some moose pasture. But at the end of the day, you bought it, right? Sorry, but your portfolio is your portfolio. And if I've got some dogs in mine. I have been liquidating in tax loss season here and taking my lumps, getting ready for the next leg up. Nobody wins them all. But if your stock selection isn't delivering at a time of record high metals prices, and particularly if I can talk for a moment about the other yellow metal, I know we'll come back to uranium, but gold's been trading sort of sideways for the last year plus. Actually, gold plus or minus 1950 or so for a year is a record year for gold. And so I understand why people are saying, oh, well, what about the miners? What about the stocks? Why haven't they done better? But uranium had a really up year. But I'm bringing this up because I hear this from uranium investors too. Well, what about the miners? Why aren't the stocks doing great? Well, sorry, but the better stocks are doing great. You just look at a year chart for, North America's biggest uranium producer, and it's like a 45-degree angle, right? You know who I'm talking about. I try not to tout stocks, Fabi, so I try not to do that. I don't own that.
The public will know who you're talking
The public
about.
will know.
Yes.
I don't own that one. I'm not trying to tout that one, but just look at it, right? And it's not alone. Many of the lower cost developers, many of the higher margin project, advanced exploration projects and so on, they're all getting recognized or have been recognized. So if your portfolio of uranium stocks is not responding, if you're in the red on your uranium picks as a basket this year, then you need to look at your stock selection. And, if those evil scum of the earth newsletter writers like me sold you a bunch of dogs, well, you need to buck up, take responsibility, change your newsletter writers, right? Sorry, but you look in the mirror if your portfolio is underperforming when the market is running. Now back to gold. So I think there is some of that here. The better gold companies, they certainly are going up and down with the gold price. They're highly responsive to the gold price. And you can make money on that if you had the discipline to not chase after them when gold went up. Like if you buy every time there's a new all-time high gold headline, you're buying high. And your best hope is the greater fool theory for, to be able to sell even higher. But that's not the speculator's formula. You're supposed to buy low, sell high. So to buy low, you have to buy them when they're hated, when nobody wants them, or even the bigger, more stable ones. At the least, you're looking for something close to 52-week lows. That's when you buy those guys. And if you do that, whatever the market's doing, you just, in an overall bull context, or the last few years of, gold fluctuating sideways, if you buy 52-week lows and sell 52-week highs, you would have made money. Simple formula. Now you can't do that with the juniors because, they might get taken over, stop existing. They might have an endangered mosquito discovered on their only property and get shut
And
down.
one person might put them in an all-time high or an all-time all-time low with like a 10K purchase or a sale.
Right. So the question is, what about the miners? And particularly in gold, I think there's been, oddly enough, the industry itself, the insiders have sabotaged themselves here. They've looked at how cyclical it is. They've looked at the last peaks. They look at 2011, right? When gold last was in the neighborhood of 2000 before this go. And I think a lot of people, a lot of so-called smart money, and a lot of the funds, a lot of the institutions, that's the recency bias. That's their last experience with gold. And so I think a lot of the people who are even willing to go into gold have been waiting for gold to crash. They're like, oh, that's the peak. It's going to go down. $2,000 is not a sustainable number for gold, right? So the next big move is going to be down. And any little movement in that direction has a lot of people rushing to the exits. And those big downdrafts have been really bad for the stocks. And yet, like V and V for Vendetta, he keeps not dying, right? The gold is still there. And honestly, anybody, I don't have a recent chart of this, but I've done the comparison before. If you overlay the 2011 peak with the 2020 peak, right, at first there actually were some similar wiggles in the top of the chart, and it was kind of scary. Like, it might just fall off a cliff. We might slide down for 5 years like it did after 2011. I could see why people feared that. But here we are almost in 2024, and we just hit a new nominal all-time high a few days ago. Like, that comparison is done. This cycle is manifestly, visibly, objectively, completely different from that. Back to the question. But so many people, they're beaten up. Every time gold hits a new high, I get it on my Twitter feed all the time. Oh, that's it. That's a peak. Oh, Mr. Smackdown is going to slam it down. Brace for doom. Like, these people have been so traumatized by the markets not doing what they want when they want it, that they have become, in a way, their own worst enemy. And okay, that's just some randos on Twitter, but the institutions is what I'm talking about. The funds, the big money here, the supposedly smart money. I think they think that way too. And I think that's been holding back the gold stocks. I mean, it is the world's largest gold producer, has been trading near 52-week lows at the time when gold hit a nominal all-time high. Now, that company has problems. You know who I'm talking about. But does it deserve to be, on the deep discount rack when the underlying commodity just boosted their margins by hundreds of dollars per ounce?
And it offers a
makes,
level of liquidity,
oh
that a lot of the
yeah,
market
yeah. No,
doesn't.
that makes no sense. Like, the market is getting this wrong. The investors, the big investors here, are getting this wrong. So I may sound like, Linus in the pumpkin patch waiting, oh, our day's coming, our day's coming. But it's not just that. I'm not just peddling hope here. You look at the better stocks, they are responding to the metal price. So if you're bullish on the metal, those stocks will go. Stock selection matters here. I wouldn't buy an ETF, though, to be fair, especially if you're looking for the bigger companies, an ETF can be an easy way to not have to do all the due diligence yourself. If you're okay with okay gains, that's okay. But I want exceptional gains. I want to maximize my gains. So I think stock selection is very important to that.
And moving over now to silver, you kind of hinted there a while ago saying, that gold is money. Silver doesn't seem to be, garnering that kind of glamour and position, at least within, the current system that we have. How do you see silver playing out if you're right about gold? Does it follow it, or is it more of an industrial metal nowadays? And how do you see that going forward?
Right. I am, contrary to popular belief and contrary to the nickname I was given on Wall Street Silver of Darth Silver, I am actually a silver bull. Like my thesis is not a bear case for silver. So put that out there. At the same time, I'm not religious about it. I'm trying to look at the facts, right? And I don't want to make huge investment mistakes because I'm so convinced that silver is going to, be the manna in the desert that I stop looking at the data. I'm sorry. But if as an investor, my process is I believe in this thesis so much that I'm not listening, that is not conducive to good investment outcomes. Now, if for ideological reasons, you want to see gold and silver used as money again, and you believe in that, and you want to support the cause, fine. Supporting a cause is fine. I've got no problem with that. But that's not an investment. That's not a way to make money. That's a charitable or ideological humanitarian, if you will, effort. They're very different things. If your goal is to make money, you have to look at the data. And the data is telling us that silver has come significantly unglued from gold in recent times. Silver had an unbroken track record. All our silver bug friends out there will agree with this, of in a bull market, silver lags gold and eventually more than catches up on a percentage gain basis, right?
That is
Beautiful.
the story. And it's a beautiful story.
And it's true, or it was true. It was an unbroken track record until 2020. Gold hit a new nominal all-time high. It was several now since then, and silver has yet to do that. So it was true 100% of the time. Now it's true, I don't know the exact numbers, but let's say 90% of the time. And that's not a bad bet. So I am bullish. And I can see in the last month, we have seen gold breakouts move silver as well. So it is tracking gold still. But we're also seeing, you can see this on the daily and weekly wiggles. Many times silver tracks copper more than gold. And whereas you have the central bankers buying gold, they're not buying silver. You have Basel III sets gold as a tier one asset, not silver. And you have the industrial use case for silver. Really, it is one of these energy metals now. It's essential to the solar part of the energy transition. And yeah, there are new solar panels that use like half as much silver as before and so on. It doesn't matter. If you're baking 10 times more of them, you're going to use more silver. So what I'm saying here is, again, it's not a bear case. I think that's a great thing that silver has this higher industrial use case. The supply and demand fundamentals do matter more for silver, though. And if there comes a time when you go into recession, if I'm right about the recession, right, there could be less demand, industrial demand for silver. And whereas you and I, who understand that silver is the word for money in many languages, might think that shouldn't matter, the comics traders, they're looking at it as an industrial metal. They're going to, like pork bellies or copper or whatever else, and they're going to sell silver. So two takeaways. One is, as even a silver bug would agree with me, I would expect silver to underperform gold in the next big move initially. The question is, how long, how much? Does it ever catch up? And if we had the one time out of 10, if it's 90% of the time silver outperforms gold now, and let's say that one time that it didn't was in the 1980s or something, well, then I would just look at it and say, okay, 90% odds of success. That's good enough for me. The problem is that the one time it failed was the last time, right? So if you had an unbroken track record and suddenly it's broken, well, now
Could be indicating a change.
it could be indicating a change, right? If the use cases change, that's exactly right. So I'll feel much better about backing silver as the poor man's gold or whatever, as tracking gold in the next bull market, or not this one, but the next one. Like the next big bull market for gold, the next big leg up will be a data gathering time for me on silver. Now, mind you, I haven't sold my silver stocks on this basis. Again, I am a bull. I think it goes up. I'm not willing to bet the farm. I'm not willing to bet my solvency or my kids, like now my grandkids, tuition funds, I don't want to be out on the street if I bet wrong on silver, outperforming gold this time. That may or may not happen. We'll have to see. I hope it does. And if it does, then I'll be much more gung-ho in the next cycle. which I hope to be around for.
You will. I'm sure you will. We both have a long time ahead of us, I'm sure. What about copper? If we do see a recession happening, anytime between now and the summer of next year, does that mean you would hold off investing in copper because you think that's too related to the
It means
macro
I am
picture?
holding off on investing in copper. I haven't bought a
Okay.
new copper stock, I think, for a year.
And you think there's going to be
Mhm.
better opportunities down the
Yes.
road?
Now, I've said that I see copper as a multi-decade bull. And if you have the patience of a Warren Buffett, right, you could buy copper now. You like today, you hear this interview, you could go out and buy the best copper stocks. And by that, I don't mean some junior that has nothing but moose pasture somewhere, right? Or guanaco pasture or grass cutter pasture in Ghana or something. A grass cutter is like a big rat, but anyway. And I get distracted, they eat them. But anyway, if you have nothing but a dream and a gleam in a geologist's eye, that's not a solid bet that you buy and put in a drawer and forget about for 20 years. Okay. Like, let's
Step
be
one, make
really,
sure that the company has
if
copper in
if
the
you're
ground, not just in
right,
the
if you're
name.
talking about a big profitable producer, okay, if I'm right about the recession, they could have a bad year or something like that, but they're not going away. Right. And over time, I think that stock would make you a ton of money. But you might have to endure pain for a couple of years. I personally think that the hard landing is going to be very hard. It's going to be a violent, sharp impact, and that will prompt the powers that be to reopen the money floodgates, not just power pivot, but money out of Washington, out of Brussels, all kinds of fiscal response. Never forget the fiscal response. There's your long and variable lags. So I think the recession will probably be pretty short because they're going to throw so much money at it. And it's going to cause, everything real to soar in prices. I think that. I don't know that. We'll see. But what I'm saying is, if that doesn't happen, and we actually, if the powers that be have the fortitude to pursue a path of austerity and really try to fix the global economy, we're looking at years of recession, if not depression. And it's very difficult for somebody to say, 2 or 3 years from now, down 70% on supposedly a bigger, safer stock, and say, oh, I have a 20-year outlook, everything's fine. It is just, I don't think 1 in 50 people could do that. Maybe not 1 in 100.
Especially when their political career depends on the opposite happening.
Wait, no, I'm talking to investors. I'm talking to our audience. Like, if you really think you could do that, if you could buy a copper stock today, after you're done listening to this interview, go buy a great copper company that isn't going away, and just wait to be right. If it takes 5, 10, 20 years, just wait to be right. I think that would actually work. What I'm saying is, I don't know anybody who could do that. I mean, maybe Rick or Doug. And I sincerely hope they'll be here in 20 years to cash in on such a check. But almost nobody I know has the intestinal fortitude to do that. And certainly my readers won't be happy if that's the guidance I give. Oh, I have a 20-year time frame. Don't worry about it. I will lose, readers left and right. I need to look at what's happening now. And what's happening now is a clear and imminent danger of lower prices. So at the very least, as a copper bull, I want to buy low, right? I want to see blood in the streets. And I see that as a coming opportunity to really load up on copper. Ideally, we'll have more big wins in uranium to take profits on and rotate those into copper at that time while there's that buying opportunity. That's my game plan. But even that aside, if I tell people, yeah, go out and buy copper because there's this multi-decade thing, and they do, and it goes down, guaranteed 9 out of 10 or 99 out of 100 are going to complain bitterly about that guidance. If I'm right about the recession. Now, if I'm wrong, if team soft landing or even team no landing is right, and it's happy days, Biden saved the world, right? If anybody can believe that, right? Actually, many of the key industrial minerals are relatively cheap. They've backed off from their highs. Copper is relatively cheap. Zinc's backed off. Lead. I haven't looked at aluminum lately. Iron is up, but most of the industrial metals are not cheap, not on the deep discount rack, but have backed off from recent highs and are therefore, if you're a bull, an absolute bull on the economy, you think I'm wrong, no recession, it's next expansion cycle is underway, then I actually think industrial metals are a buy now. I don't believe that. And my guidance from my readers is, A, if there's a chance to buy really low, I want that. B, if I'm wrong, it's not like all these things are going to be 10 baggers overnight. Right? It's going to take a couple years for this economic train to really get going. And we'll be able to see that I'm wrong. We'll be able to jump on that train before it's left the station. It'll be moving. We'll have missed the beginning. But I think it would be a mistake to succumb to FOMO on something that hasn't even started moving in.
That's a very good point. Let's move to uranium, because let's face it, that's all my followers want to talk about. I talk about the other stuff so that they learn where the opportunity is as well, because uranium is a train that's already moving in my opinion. But how do you see this bull market that we're obviously already in playing out? Because like you mentioned, lots of movement in the commodity itself, and lots of people complaining on Twitter that their stock picks haven't really gone anywhere, or haven't gone anywhere compared to a peak 2 years ago in November of 2021 when they did peak.
So I've got good news and bad news here. The good news is that based on research done by my team, I didn't come up with this. One of my guys, a brilliant researcher, was the one who actually came up with this. His name is Constantine. And I had the idea, or my view was that high prices would cure high prices in the uranium space. Right? It's not rare. It's not as abundant as lithium, but it's not rare. There's a lot of uranium around. Economic concentration is a little bit more difficult, but there's enough of it, and there are enough significant concentrations of it that high prices easily cure high prices in this space. Fortunately for bulls, right, it's not so easy to find those economic concentrations. And then if you do, to get them permitted, there's a lot of NIMBY thinking. Like NIMBY affects all, not in my backyard, affects all mining propositions. There's very few places in the world that really welcome mining. But even amongst those, many of them are like, mining is okay in general, but not uranium. Oh, that's scary stuff. Right? There are uranium exploration bans in place in places that are otherwise welcoming to mining. So there's some interesting sort of long-term supply constraint issues there. Meanwhile, the demand is really taking off. So, but there's low-hanging fruit, right? There's known deposits that have just been waiting for higher uranium prices to come to the market. There's mothball production that was waiting for the world's two largest producers, both cut back voluntarily on their output during a time of low prices and are still not back up to nameplate capacity, but are headed that way. So the question was, and previously my view was that high prices would quickly cure high prices. We get a surge, we get to the incentive level, a bunch of pounds would come on the market, and then there would be a correction until really the demand absolutely blew away. Like everybody could produce all they could and it wouldn't be enough, right? At that point, then you'd be looking at again, potentially multi-decade bull for uranium. The research that my guy Constantine came up with was actually, even if you count the low-hanging fruit, it's not enough. The demand case has now already grown that the supply will not keep up. So this has made me much more long-term bullish, not just like decades ahead, but like years ahead, bullish on uranium. This brings us to what's happening now, though. Like there is a question mark. Like I'm there. I haven't, I'm not rotating out of the uranium sector. I'm just taking profits on my big wins, any that I haven't already. Nobody goes broke taking profits. People say, "Oh, he lacks conviction." Screw that. I don't want to make money. I want to stand on my convictions and go down with the ship. So yeah, nobody goes broke taking profits. I am doing that. $85 uranium. How could I not? Right? I've been in since $18 uranium. Anyway, but I'm not the only one who saw this coming. And it's not just Sput hoovering up cheap pounds. There were other funds, and there were mining companies. There were other institutional investors that bought uranium with the intent of selling it again. And nobody knows how much of that secondary. This is a new kind of secondary supply that really wasn't a significant variable before. We have a rough idea of how much there is. You can add up all the pounds that all these publicly traded ones say they bought. But we don't know how many of those will be for sale or at what price or when. But we do know that okay, let's say you're a fund. Okay, Sput can't sell without changing their corporate bylaws or whatever. So that's, that would take shareholder approval. So that's probably,
which means they would signal to the market well ahead of time, and everybody would have time to
until that happens. Those pounds aren't coming back. But to my knowledge, every one of the others can sell when they want to. Right. So, if you bought at 30, 40, $50 a pound, and now we're looking at 85, there's money on the table there. We don't know how much of that's going to come on. And we also know that the miners who bought, they bought it specifically to buy low, sell high, and use that money to pay for their building their mine or their new mine or their expansion or refurbishment or whatever. Like that, they're supposed to sell that. The idea is not to buy that and hold it forever. The whole notion was, we're going to make a bunch of money on this, and that way we won't have to dilute you, our shareholders, to build our mine. It's a great idea, and it's worked out. Congratulations to those guys. Hat tip, right? Woohoo! But that means those pounds are coming to the market. So uranium has just gone almost vertical. It will be all other things off the table. Just that alone argues for some correction. We have seen for 5 years a 2 steps forward, 1 step back pattern in this market. I see no particular reason, especially with uranium having reached now the incentive price. There's no reason to assume that it has to keep going up. Like, this is not 2007, right? Cigar Lake's not flooded. Kazatomprom exists now, which it did not back then, right? So it could go, right? A Russian uranium ban, who knows? Maybe it spills over to Kazakhstan. It could go, but it's a mistake to assume it will go. And the odds, just looking at markets in general, you have such a big rise, the odds favor another step back. It's time for a correction here. And on top of that, you have people who bought pounds at, $30, $40, with the intent of selling them later, looking at a double, right? So you have a natural period where markets would correct. You have known sellers. We don't know when they'll hit, but we know that their intention is to sell. And we have mothballed production and tamped down production coming back up to speed. All of this argues for caution about uranium in 2024. Doesn't derail the thesis, doesn't make me a bear. I am not a uranium bear. I am not selling all my uranium stocks. Keep the hate mail to yourself. I'm just saying, my experience, history, that of my mentors handed down to me, tells me not to get irrationally exuberant about uranium this year. It's not a bear case. It just, I would expect a bit of a breather here. No, I hate it when the people on mainstream finance say, oh, there's a bit of blah, blah. No, I think it makes sense to expect a breather here, some correction in the uranium space, and then off to the races after that, which makes actually the first yellow metal you asked about my top pick for 2024. And that may not seem like much of a headline. Oh, Gold Bug picks gold for 2024. Well, actually, last year, my highest conviction trade for 2023, or not this year ending, my highest conviction trade for 2023 was uranium. And I was right. My highest conviction trade for 2024 is gold. We'll see if I'll be right.
I sure hope you are right, because that's one of my favorite picks right now, gold, especially experienced teams with great projects in the development stage specifically. I just absolutely love that stuff. I love looking at all the NPVs, looking at the price of gold and going like, this works, even if the price doesn't go any higher, like this stuff works. So it gets me all giddy.
All the mining stock nerds out there are falling in love with you now.
Do you know what? It's what I like. I know it's weird. Most women like bags and shoes. This is the stuff that I like. Looking at NPV sensitivity analyses. But yeah, no, nobody's perfect. Lobo, just to wrap this up, any sort of last words before we go a little bit into your newsletters? Uh, what do you think that the average junior investing individual is missing and that they should really start doing more of or less of going into 2024? I know you've mentioned lots of things, but there are
Yeah.
always things that come up time and time again.
Where to begin? Where to begin? I guess maybe a simple way to summarize is there's no get rich quick scheme here. This isn't easy. If it was easy, right, everybody would do it, we'd all be billionaires. That's not the way the world works, let alone investing. And I remember I was giving a workshop once on due diligence, and I was talking about reading not just the NPV reports, which are like phone books, but the financial statements. And there's a lot of forensic data in a company's financials. You can detect profligate management a lot from looking at a company's mandatory filings. And some guy says, "Oh, that thing's 80 pages long." I'm just looking at him like, "You want to make $1 million? You want to make $1 million and you're not willing to read 80 pages? Like, go home." Sorry, but this is real work. Okay. Even me, you say, "Okay, Lobo, you're so smart, you're great. You pat myself on the back. You do this for me. You be my due diligence guy." That's why I'm called the due diligence guy. I get it. And yes, I'm happy to help. But ultimately, we all make our own investment decisions. It's not just, it's become a meme, like DYODD, whatever, do your own due diligence, right? I don't mean that as a cop-out or as an excuse. Oh, it's not my fault. If you didn't do if you just listen to me instead of doing your own due diligence, it's your fault. That's not what I'm trying to do. I'm not blame shifting here. I'm saying that stock selection, like if you're one of those people complaining because your portfolio is in the red when the metal is in the green, you didn't pick the right stocks. Okay, sorry, but you didn't pick the right stocks. You can do something about that. You want to make a bunch of money? Well, put the work in. Read the financial statements. Look at these things. And if you don't understand all the drill results or all the chemistry or whatever, fine. Hire people like me to help you with that. But you still need to do that work. You still need to understand what you're doing. And if you do, confidence isn't based on faith. It's based on knowledge. If you do the work, if you do the due diligence, you understand why you bought this stock, then you'll understand when news happens that, oh, well, that has nothing to do with my basis for speculation. I can ride this out. Or, oh my gosh, that's fatal. This is why I bought the stock and now it's gone, right? So it's time to sell, take my lumps, right? So I guess, it's not a very friendly summary here, but the message is don't be lazy. You want to make serious money, then you need to be serious about making that money. And if you trust me as your due diligence guy, thank you very much. Or Brent Cook or Adrian Day or some of the other guys out there that I think are the real McCoy. And I'm not making it all about me, but you still need to get to the point where you understand why you hit that buy button, right? You can get help, but it's your finger on that buy button, and you will make mistakes if you don't understand why you're hitting it. If you're just trusting others, that's a bad setup. That's my take.
Absolutely. I fully agree. And on that note, speaking of your newsletter, what is your newsletter kind of geared towards? What kind of investor is ideal for your newsletter, and how can you help them?
Well, there's two, and for all two people who are still listening, when you say something like that, they're quite different. One service is called My Take, and it's not really a newsletter. There is a monthly edition for context, but the whole thing of My Take is it's a database, hundreds of resource stock evaluations. And that database is updated monthly and even in between editions on a monthly basis plus. And where I'm not always right. And by the way, these evaluations, it's not just, oh, here's the company, here's what they're doing, good luck with that. It has a literal thumbs up or a thumbs down. Since I'm a wolf, I'm working on changing the logo to claws. I haven't found a good claw yet, but we're working on claws. but there is a literal thumbs up or a thumbs down on the stocks. And if something is really like clear an active danger to your wealth, I will say that. I will put this is a sell immediately kind of stock on there. Not many like that, but there are some. But the main point is these are independent evaluations. That there is no sum of money a company could pay me to betray the trust of my readers. I got 1,000 clients now who believe in me, right? I can't sell out. Right? I mean, I wouldn't. It's not my character. But even if I was, I had no character, it would financially I would destroy my business, right? And it's growing. My business is growing. I'm happy with it. So it is in my self-interest as well as in my character, my nature, to work only for my clients, my readers. So and you can slice and dice this database. You can use it to create a shopping list of just say silver junior producers or oil and gas royalties or that have a thumbs up, right? You could do things like that. So it's a pretty valuable tool. And I often get a response from people who sign up like, oh my God, I had no idea what this was. In fact, I'm thinking of raising prices in the future. We're working on some upgrades and then I'll do it probably because I keep hearing that like, oh my God, I can't believe how valuable this is. Well, if that's what people are telling me, the market is speaking. The other one is, it is a newsletter. There is a monthly newsletter with my latest research thoughts. And the center of that is my own portfolio. So it's not just, this is the Brent Cook model, right? It's not just that I disclose that I might own some of these things. The whole idea is this is the portfolio of stocks that I think highly enough. These are great enough, in my view, that I'm willing to put my own money into it. So it's 100% overlap. Like if I'm not willing to put my money in it, it doesn't go in the portfolio, no exceptions. So that's the centerpiece of that. But it's also, again, more than a monthly newsletter. We put out alerts if anything changes in between editions. And on a daily basis, I do a news sweep for any developments, material news from our companies in the portfolio. So now you can hear from me on a daily basis. This is what happened. This is what it means. This is what I'm doing. So it's, I think, a pretty high level of service.
That is a very high level of service.
And don't forget, there's the free letter. If you never heard of me or you don't know much about, that's the best way to start. It's free. You can get a feel for how I think, how I analyze things, what my approach is. And my promise there is that if you sign up, I will not spam you with a flood of advertisements every day. We don't do that. Either you decide at some point to hire me as your due diligence guy or you don't. And that's all there is to it. Oh, by the way, no Christmas specials. There was no Black Friday sale. I don't do promotions. There's no, oh, sign up by midnight. I always wonder about that. Midnight where? Who's midnight?
Good
right?
question.
Special today and every day. It's like special today, right? I don't do any of that nonsense. It's one square price for everybody all the time. If you're waiting for New Year specials, ain't gonna happen. Take it or leave it. But I'd start with a free letter. See if you like my way of thinking about things.
Awesome. And people should get in on it as quickly as possible if you're thinking about raising prices. So that's my tip here. We're gonna leave a link down below. It's an affiliated link, yes. And if you don't like that, then you can just like take out the last bit of the link and then suit yourself. Just go and just make sure that you do check Lobo's writings out, because I just find that within this industry, there is just there's a lot, right? Because we're never just talking about one commodity. It's like, okay, what's happening in uranium, what's happening in gold and in silver and in copper. And it's very easy to just lose sight of, what you're trying to achieve with all the options that are available. And a lot of the options should not be considered for your portfolio, depending on who you are and how you want to play things, and if you ever want to make any amount of money. So maybe not in maybe not in that order, but Lobo Tiggre, thank you so much for coming on. I always love listening to your stuff, and it's a pleasure and an honor to have you here. People should definitely go and check you out. Like I said, link below. Thank you very much for your time. Hope to do this with you again. Maybe we'll be in a recession. I don't know, but I don't know if I'm hoping for a recession so we can make
Yeah,
a really cool
we
video
don't
about
want
how
to fall
you were
victim to
right.
Schadenfreude.
Yeah,
But yeah, we
exactly.
should do another one in 6 months. By then I will have to say I was right or I was wrong.
Let's do it. Let's do it. I'm not gonna make a bet for or against you because I don't know if I would lose money or make money. It's kind of like, oh, do I want to win or do I want my portfolio to win? So thank you so much for coming on, and I hope to speak to you soon.
Thank you.